3 mega rounds in 3 weeks, 838 million. Goldman Sachs co-leading. So this is not another funding cycle. This is institutional capital declaring that the biotech winter is over. As the founder of Neosphere, I've been tracking these movements closely, and what I'm seeing represents the most significant shift in life sciences investment since 2021, late Corona. The numbers tell us an extraordinary story, and more importantly, they reveal who's writing the checks. We've seen total VC funding jump from 16 billion in 2023 to 21 billion in 2024. But here is the mega changer. Mega rounds over 100 mil have surged by 42%, and now they represent 2/3 of total biotech funding, compared to just 1/3 pre-fund. This means that the concentrated institutional capital is flowing to quality assets. Goldman Sachs launched a $650 million life sciences fund. OrbiMed closed $1.8 billion for healthcare investments. And these are not venture tourists, these are sophisticated institutional players making structural bets on biotech's future. Now, this is what institutional investors see. AI-enabled biotech are reporting 20 to 30% higher success rate. More importantly, 50% shorter trial durations and huge cost-saving potential. So this convergence is projected to hit 164 billion by end of the decade. So this is the return on investment that sovereign funds, pension funds can no longer ignore. Let's be honest, last 2 years were brutal. I've sat across countless and met countless founders who had incredible technology but couldn't get institutional investors even to return their calls. Market was booked. Quality assets were taken at a fire sale valuations. Only 4 biotech IPOs priced in the first half of 2025, compared to a typical of 15 to 20. Now, this is what separates winners from those that are not making. The companies that survive understood that institutional money doesn't chase early stage dreams anymore. They demand clinical validation, experienced management teams, and clear path to commercial scale. Let's look more deeply into 3 deals that changed these dynamics. Let me break it down, right? So what is the signal here all about? Yeah? So we have a MapLight Therapeutics, 372 million Series D, co-led by Goldman Sachs and Forbion, and participation from others. They are targeting schizophrenia, Alzheimer's psychosis, and directly competing with Bristol Myers Squibb's 14 billion Coberify acquisition. Phase 2 trials are ongoing, and this is institutional money betting on a late-stage validated science. Then we have a Strand Therapeutics, 153 million Series B. This was led by Kinetic with Regeneron Ventures, Amgen Ventures, and Eli Lilly participating. They have a programmable mRNA which showed complete responses in phase 1 cancer trials. Total funding now exceeded to 50 million. This is the proof that institutional investors did pay premium for breakthrough platforms with a clinical validation. And my favorite case, Crea Therapeutics, 330 million. Gene therapy specialists with over 800 million raised across all rounds. Their lead assets, Create 25, is ready for clinical trials. And this represents institutional confidence in single dose, potentially curative treatments over chronic therapies. Now, why these moments matter? The signals are clear. 64% of executives expect an uptick in IPO in Q4 2025, the most bullish outlook since 2018. Life sciences VC has delivered a median 21% internal rate of return over 10 years, making it one of the top performing private assets. Federal rate cuts are reducing discount rates for long duration biotech cash flow, making risk assets even more attractive. But here's the catch, where founders getting wrong. Institutional money is concentrated in the later stage, validated assets with experienced team and with a differentiated science. If you're preclinical with unproven management, things may be more challenging. It's a case by case, but that's a general rule. They're funding data. They want to phase down readouts, not just promises. They want management teams that have taken companies public. First-time founders it's making it hard. We are seeing this shift firsthand, and a network of sovereign wealth funds and family offices in the Middle East and beyond is actively seeking opportunities, but their standards have never been higher. They're looking for companies that can deliver, demonstrate clinical differentiation, and regulatory clarity, clear path to commercialization. Yeah.